Today, we're going to talk on interest rates and how the recent US tariff situation will affect the interest rates in our Singapore housing market. So if you're someone who has either bought a property or is looking to enter a property, I think this will be really of interest because why? This research that I've done can help you to save $200,000 to $300,000 just by employing all these tactics that I'm going to show in this video. So do stay tuned. Hi, my name is Nicholas. If you're new to this channel, I do mainly real estate insights. I share my real estate strategies and I also share my personal journey that I'm in with my wife. So if you're interested in this kind of content, please consider subscribe to the channel and like this video if it has helped you. So what happened recently, we know with the US Liberation Day, I actually covered an extensive topic in my previous video. You can check it out right over here. So I'm not going to share too much on how the US tariffs are affecting the housing market in Singapore in general. This video is really targeted on interest rates and how the tariffs will affect Singapore's interest rate and how that can help you or maybe not help you in this situation. So how does this affect prices in general? So previously, I also mentioned in the previous video, when US introduced tariffs, generally the cost of consumption goods will all increase because why? Most of the things that we consume, be it in the US or be it in Singapore, these are all imported stuff. Even if you were to consume something that is produced domestically, that product probably stems from parts that were from other countries. So if you are consuming, let's say, a US good and let's say an iPhone, and the iPhone has some parts that are imported from other countries, then maybe the price will also go up. The cost of production will go up. So if the cost of production will go up, the overall price of that iPhone will also go up. So we feel that the general trend will have an upward trend over here in terms of prices. Then how does this affect interest rates? So before we consider how this whole thing affects interest rate, we need to understand what is the role of the Federal Reserve in the United States. So they have two objectives. First one, most people will know that they need to ensure that there is a healthy price stability. They are trying to aim for inflation to be only at 2% a year on year. So this is something that most people know about for Federal Reserve's role. But something that most people don't know is that Federal Reserve also try to help the US economy to have the maximum full employment rate. So these are the two main goals that Fed needs to achieve as their role. Then recently I've also attended a research talk by UOB, and this is the slides I've gotten from them. Their forecast for the growth, they've dropped the growth forecast to 1% from 1.8%. Over here, a key thing for us to take note will be they are expecting 3 rate cuts this year of 25 basis points each time, which means from now to end of the year, they are expecting about 0.75% drop of the interest rate from the Fed. Because we follow closely with the US market, it's likely that we will follow the price trend in terms of the interest rate as well. So this is the trend of the interest rate. As you can see, projected wise, we are looking at a drop of the Fed rates. But what I want to highlight is that actually SORA, the last time that Fed did a rate cut was in December 2024. But after that, actually Fed didn't announce any more rate cuts. Yet we saw from here, right, January onwards, you can see that the 1-month SORA and the 3-month SORA, all these rates all are declining. So why is that? It's because Singapore not just only follow the US Fed rates, but rather than that, the SORA rate is also heavily dependent on the SGS bonds. So from UOB, they also mentioned that Singapore has a different strategy of relocating the funds. So maybe they cash out more from the US market and focus more on local market. And maybe the demand for Singapore bonds have also gone up to drive up the prices of Singapore bonds. That brings down the yield, and that's why SORA rate is also having a downward trend. We see over here, even when Fed didn't announce any rate cuts during this period over here. So this is back to UOB slide where the interest rate is expected to have a downward trend over here. So right now we are about 2.54, 2.55. This is in 4th April. And we are expecting the rate cuts to be dropping like that. This is according to UOB. So in layman terms, if you are taking a $2 million loan over here and you're taking max loan tenure, a loan tenure of just 25 years, not 30 years, based on current SORA rate, that is about 2.84. your monthly mortgage is about 8,200. After it drops to 2.1 plus the spread only at 2.4%, then it'll be 7.8K. So this difference in interest rate, right, will be about 138K in 25 years. So honestly, this is a lot of cost savings that we can have just based on the drop in the interest rate. Okay, so then this is a very, very important slide that I will spend some time to share with you. How will interest rate relate with housing prices? So let me ask you, most people, if you were a buyer today, would you enter the housing market when interest rate is low or high? Usually you enter low. Why? Because when interest rate is lower, you can actually borrow more with the same income and your age and everything. So because of that, your purchasing power will go up. That's why you are able to afford a higher quantum property if you can. Then most people will also think like you. So that's why if you look into this period of time when interest rate was low, housing prices actually go up over here. So this is housing prices and this is your interest rate over here. When interest rate is low, housing prices generally go up. COVID time over here. When interest rate drop, housing prices also go up 54% over here. So that's why it's a correlation. When interest rate drop, definitely housing prices will see an increase. So where we are now is over here. And we know that Fed, or rather UOB forecast that Fed will drop rates 3 times this year. That's what they forecast. Since we know that it's coming, and we also see that UOB has forecast that the SORA rate to come down, that's why this is likely to go down furthermore. So it's very likely that from what we see here, we will see a replay of what happened in COVID when interest rate drops and then the prices start to increase over here. So honestly, this might be the best time to enter the market. Why? Because from what we see in COVID over here, actually the price start to increase when interest rate was declining but hasn't reached rock bottom yet. Most people will wait for interest rate to drop all the way to the lowest before they enter the market. But to be very frank, we won't know when is the absolute lowest that is right over here. To be very frank, as long as the interest rate is dropping over here, this seems like the best time to enter the market. Just like stocks, we won't know when's the absolute rock bottom until it becomes the past. Same thing, interest rate, we also not know that when is the lowest point of interest rate, but you can see that the price growth is already going this way and interest rate is dropping. This is the time when the divergence will probably develop even more. The crucial thing is, if you were to wait for the price to drop, let's say over here, most people will think like you, will also enter over here. By then, the prices might be already over here. So let me share with you some case studies. So this is Florence residence in Hougang, mega development, back in first quarter 2019. Once again, this is when interest rate was still relatively higher and people were not entering the market. Higher floor, this is 4 levels higher. I need to stress this point. 4 levels higher was sold at $1.389 million, and the lower floor unit in March 2022, when the interest rate was already very, very low, the price has already increased 1.68 million. So why did this happen? Because in Q1 2019, when Florence was just launched, sales wasn't that great. Developer also has a lot of fear because they need to move stocks, they can't possibly increase price. People who were daring to enter the market at that time, or rather savvy people who know that, this is probably the best time to enter. When they enter, they lock in that day one price at this price. But as interest rate comes down, when people feel like, oh wow, now it's a very good deal, interest rate has already dropped so much, right? And people rush in to buy, developer can also see that. And developer, when they see that, do they have fear? Actually, no. They will see that, wow, it's an opportunity for me to increase price because now I can squeeze more from the same group of buyers. Because as interest rate drop, right, just now as I mentioned, for the same income, you can get a much higher loan. So the developers also know, wow, actually these same group of buyers have higher purchasing power. So isn't that my best chance to increase price? And also because during this time frame, from 2019 to 2022, quite a few units have been sold already ma. So the developer now has more confidence that I can sell by TOP within a 5-year mark. I know I definitely can sell out. That's when they will increase price. And so that's why a 4 levels lower unit was actually bought almost $300,000 higher than a higher floor unit. So this is honestly a very, very drastic difference in price. To be very frank, this difference of 290K, I don't think you can make back just from the interest rate difference from day one. So for example, if this person entered at like maybe 3% and this person entered at 1+%, in a matter of 3 years, I definitely don't think you will make up 290K, 300K just in 3 years, for example. So sometimes we need to rethink about our strategy that, if this is the case, does it mean that now might be the best time to enter? So that's why I really think that right now, we know interest rate is going to drop, right? We know it's like, Fed is slated to do that. UOB has forecast that. Before they drop the interest rate, we should think whether we should really, really enter. Because if we only enter when the interest rate has dropped, most people will also think like you, and most people, when they enter, chances are you will be this guy who will be paying 1.68 million for 4 levels lower. But today, because interest rate is still a bit higher and there's so much fear in the market because of the US tariff situation, you can possibly buy a high floor unit at a much lower price. And then you just ride with the developer because developer and you will have the same motive to try to earn more money. So when a developer sells the lower floor unit or a worse facing unit for more, that's your paper gain already lor. So for this, I covered another video which is the developer pricing strategy. You can check it out right over here for a more detailed explanation. So to sum up, honestly, I think because we know interest rate is going to drop, if you are a savvy investor, if you're a savvy buyer, you are sitting on the fence, don't know whether you should enter right now, definitely I think you should consider entering right now. Because why? Let's say you are buying new launch, right? We are fixed, no pun intended, we are fixed to get a floating rate package. Honestly, from now till TOP, your absolute interest that you pay to developer is quite insignificant as compared to if you buy a resale property, the interest will be much more because it's 75% loan dispersed from the get-go. For the new launch segment, because it's progressive payment and you only pay bit by bit from the start, your absolute interest amount from now to the TOP phase will not be super significant. Then since it's a floating package and we know the interest rate is dropping, it's pegged to SORA, your interest will also drop along the way until TOP before you reprice to a fixed rate. So honestly, you can also benefit in the cost savings in the 3 years as the interest rate drop. So to be frank, this is a win-win situation. So yeah, definitely I do think that you should consider that. Then of course, if you are someone, you just bought your property, you are thinking whether to reprice, this is also a good time to consider whether you should reprice because the fixed rates is quite attractive. Depending on when you reprice the last time, if you are having a 3% kind of interest rate package right now, then definitely I think you should reprice lah. So either way, honestly, everybody has something to gain during this crisis. I hope you have benefited from this video. If you like this kind of content, please consider subscribe to this channel. My name is Nicholas and I'll see you in the next one.